Welcome back to another episode of Forex Tech Magazine. It's your host, Lewis. And is today is February the 4th, 2019. So unfortunately, if you have not made any money so far this year, you're already in the second month of the year. Hopefully, if you stay tuned with us, we may be able to share with you some tips and tidbits that may change that for you. And if you have been prosperous and you have been making money, well, congratulations to you. Before we get into the little tips and tidbits, let's get to the disclaimer. Disclaimer goes a little something like this. Any and all information shared with you by Forex Tech Magazine should be considered to be for educational and entertainment purposes only. Nothing that is shared with you by us should be considered to be for financial information. If you are in need of financial advice, our suggestion to you would be to consult with a licensed professional advisor. And now that we got that out of the way, let's go ahead and get into why you came here for in the first place. And that is this right here. Maybe not this right here particularly, but this right here. To look at some trades. This right here is the Euro Japanese Yen, which we're not going to discuss. And this right here are some indicators, which we're not going to get into. We're going to get out these indicators, and we're going to get off of this. What we'll do is we'll go into the Great Britain Pound, New Zealand dollar, right, which is what we're in right now, currently in this demo account. And we'll look at how it's faring, and we'll see what's going on, what's going right, what's going wrong. All right, now if you notice with this particular pair here, this is our A, this is our B. All right, and originally when we got into this pair, our C was here. All right, and we thought then since the C came down to the red, did that mean that our extension would be up here to the red, right? All made sense, everything was good. So we got in here, right? A little bit above the C, wait for price to come back up. Matter of fact, if you go back and look, let's see here. So if you look here, wait for price to get over to the buy side, which it was. Boom. All right. Anything under this side is the sell side of thing. Anything over this side is the buy side. So wait till price get into the buy side. Everything looked right with the world. Looks like we made the right decision. Price began to move up. Hit resistance, move back down. Came back to the C, didn't go below the C. Move back up. Came all the way up to a couple of pips away from the take profit. He actually hit resistance, and then it began to move back down. One thing that we didn't anticipate, though, the price would move all the way back down. Matter of fact, price moved so far with this particular pair, it almost pierced our A. All right, if you look here on Friday, it almost pierced our A. And if it would have pierced our A, what would have happened? That means that this whole move would have been negated, and that we could expect price to be no longer in an upward trend, but now consider looking at a downward move for this particular pair. Not saying that it's still not going to happen or that it could not happen, but that's what we would have been considering. Because price moved all the way back down and almost pierced that A, that means it went through the this blue, lavender, whatever color here, and then it went to the green. So we had to adjust our take profit accordingly. First, we came back to this area, and finally, we had to rest here in the green. And that's where we're at right now at the moment. Now, also at the moment, price is making a move up. So, a couple things we got to consider is A, is price about to go back up and hit our take profit, right? Or is price is doing a little bit of a pullback because after this big long downturn, right? And then eventually it's going to start back turning down again. I don't know. The one thing I can tell you for sure, though, is that looking at this particular pair here, right, a couple things. This is the reason why I like to put our stop losses back here below the A, right? Not everybody does it, and I think part of the reason why is because they don't feel like that they could sustain the loss if price goes below the A, or also because if price makes that trip back below the A, somewhere along the line they would get a margin call, right? Either one of those things are pretty bad. It usually means that either you're over trading your account, or you're over leveraging, or you don't really have enough funds in your accounts to make those trades. Either way it goes, if you put in your stop loss back at the A, right, after you've done your risk reward analysis, and it's still causing you, financial pain to do so, my recommendation would be maybe pass on that trade and look for a trade that you could get in where it wouldn't challenge your account as much, right? The other thing is that, when we look at this particular trade, one of the things that we could have done differently for this trade is perhaps went in and got a risk-free trade once we crossed over into profitability. And we could have did it on several occasions. We could have did it here after we, got in initially. Price went up. We could have got in and just put in a risk-free trade, and as price came back down, took our profits, right? Got back in again, did the same thing again, and as price began to move back down, take our profits. All these ideas are not bad ideas. It just really depends on the individual and depends on what you're trying to accomplish and how comfortable you feel with making these moves. As we get farther along in the year, it may be something that we want to consider, but for this particular trade here and for this particular account here, I felt comfortable enough with risking putting the trade back at the A, just because this account was big enough, had enough money in it, had enough of a cushion in it. Still though, because I'm trying to show you guys, a different way of trading, probably would have been better just from a learning standpoint for me to kind of come in here and to manage this account, actively manage this account a little bit better than I did. So going forward, I probably will start just doing more risk-free trades on these accounts. Meaning that once we get into the profit zone, I'll probably go ahead and just put in a stop loss to lock in profits, and then just to guarantee that we minimize any losses or just won't take any losses on these accounts. I'm thinking about it, maybe. Because one thing I do like to do, and the reason why I'm still debating it, is because I like to see how price plays out, right? Because I do believe that there is that is logical to let price make its move, and then even though the ABCD pattern doesn't work 100% of the time, I believe it works enough of the times that it warrants to allow price to be able to move to make its necessary moves in order for you to be able to be profitable in trade, right? So we'll see. We'll look at this and we'll go forward. We'll see. But I just want to kind of like look at this right here, and I want you guys to kind of learn from what I'm doing. Let's see here. Morning. Hey, JB Trades 93. Good. Hey, good morning, my friend. It says I've entered. What's this? Great Britain J buy. So that's what, Great Britain pound, Japanese yen buy. Okay, you entered a buy on that. Let's look at that trade, my friend. Let's look at that trade, my friend. And see where it's at. But anyway, so for this one right here, looks like it's making its move up. It hasn't given us the buy signal yet, so we'll sit back and just kind of wait on this right here for the next 48, 72 hours and see if it goes into the buy channel. It may or it may not, but we'll see. Okay. Great Britain pound, New Zealand dollar. Probably be a wait and hold type trade for me. Let's look at this Great Britain pound, Japanese yen. Oh, my friend, it has entered the buy zone. What is that? What? Oh my goodness, there we go. Not mad at it. It looks like it's entered the buy zone. All right. Here goes our A, here goes our B. Obviously, this is our C here. Price went up. Price came down, started downward channel. Wait for price to get over to the buy zone. Looks like right now it's 3 o'clock. 3 a.m. candlestick has crossed over to the buy zone. Now the telltale signal here would be to see if it closes over here on the buy side, and if it does, then that looks pretty good. One thing I will caution you, and this is something we talked about last week, is looking at the larger time frame and seeing if you're in the buy zone on the larger time frame, just to kind of help with this whole momentum trades. All right, looks like we are. All right, my friend, you are in. You're in like Flynn, and I gotta tell you, hey, it looks good to me. Looks good to me. As long as this thing holds up here, as long as this closes over, it looks like it's good. Looks like it's a good deal to me. Looks like the take profit. I mean, I don't know where your take profit is at. We had our D extension out to here. And for us, that looks like that'd be about 139 pips. Looks good. Play ball. Looks good. So yeah, congratulations on that one, man. Congratulations on that one, friend. Looks good. So I don't know. We'll see how it goes. Cheers for the rundown. Appreciate it. It says hi. Take it at 145. All right, my man. Hey. Take it at 145. Let's see. I like the idea of doing the round numbers. Reason why, that's good. So you want to get out before you get to that D extension. I'm not mad at that. I think that's a good strategy. The 1 foot, I'm not mad at that, my friend. I think that's a great strategy. I think it's a great plan. You know, you're not greedy. You know, you're waiting for the market setup, which is the right thing to do. You got momentum behind you. It's like there's buyers in on this trade. Now all we got to do is see how it plays out. I'm not mad at you, man. Hey, you know, once this thing hits, man, go have a go celebrate for me, okay? I might even actually get on this one right here tonight myself. This looks good. This looks really good, okay? Only thing is, if you've seen some of my past episodes, you see that I hate Japanese yen pairs just because Japanese, you know, the yen is a safe haven currency at times, and it never does what it's supposed to do. But I like the way it's looking tonight. I love the fact that you waited for the setup to occur, and now you're in it. You got momentum, as you can see. You know, price was swinging down. It was going down, and all of a sudden you got buyers coming back into the market, pull back a little bit initially, and then they push back through again. And so now what we're looking at is buyers pushing back over this this downward trend line. And what we need for it to do is just for this 3 a.m. candle to close above this downward trend line, right? And then you just kind of expect for price to push up a little bit more, pull back, should take off and go ahead and hit that price target for you. If price closes below this downward trend line, though, that's where a problem may be coming in at, and it could just be seen as a test of that trend line and then a continuation of the downward move. So don't know just yet. We'll see. I'm pulling for you though. Hopefully this is you know, it's gonna close above it, and you know, you'll be in the money, my man. Be in the money, my friend. Good deal. So we'll do, my man. Good deal. Good deal. Let's look at the Great Britain pound Canadian dollar. This is another one right here. Got the A, B, C patterns, right? Price is pushing up. We see where some counter trend lines are happening. We see where we break through the counter trend lines. Of course, once we did, you know, price pushed up. And we see right now we are in a pullback situation where price is moving up, but hasn't broken the counter trend line yet. So for this particular pair, would be another kind of wait and see type mode for this particular pair. And if you look at the horizontal lines that we have here on the charts, if you haven't already identified them, these are support and resistance areas for these particular pairs. And the reason why we identify where they're at on the charts is because they help us find potential U-turn points on the chart, which really helps us get added confirmation when we are trading our pairs, right? Because if we get into a U-turn point, and you're trying to buy, maybe, you want to be a little bit more cautious going in. Maybe you want to make half of the trade at that point, and then the other half once it's cleared it. Same thing if you're looking to sell and you get into an area of support, you want to be cautious of that. And then also too, if you're looking at your C, it gives you a little added confidence that this C is the right C because it's right here at the U-turn point, and so it gives you a little added confidence to go ahead and purchasing, or maybe even putting a stop loss at that particular point or under that particular point, because you know that that's a U-turn spot in the market. Support where in the market, in the past it has U-turn, buyers to come in or sellers to come in, and so the expectation is that history tends to repeat itself, and so you can kind of expect potentially the same thing happening again at those areas in the market. Okay. But as of right now, this right here looks like to be a hold because price has moved down. It looks like it could be U-turning here, like finding a bottom here in this area. But it hasn't pushed back up, hasn't broken that counter trend line as of yet. So we want to just be cautious of that pair before we get into it. So the next one is the Great Britain Pound, Aussie Dollar. This particular pair here. Once again, we got an A, B. Originally, this looked like it was a good strong C, right? Price pushed out here, again to push up. Looks like it was going to be a pretty short retracement, and in fact, what happens? This thing goes up, and then it just totally goes all the way back down, almost goes back through the A. So this one right here is another one, kind of like the Great Britain Pound, the Zillion Dollar, just really kind of crazy. And part of the reason why you look at the Great Britain Pound pairs and you say, well, why is the Great Britain Pound pair spazzing out like this? But part of it is because the whole thing with Brexit, and then also, some of the things that's going on in the currency pairs is paired up with, Aussie dollar in particular. This right here is a real big trading partner with the U.S. and with the Chinese, and right now with the whole thing with the tariffs, that has definitely impacted Aussie dollar pairs, right? Good thing is over the weekend and last Friday there was some positive information that came out about the tariff agreements, or possibly tariff agreements with the U.S. and China, and so piggybacking on that, the Aussie dollar has been getting some strength over time, and it looks like there has been some negative information come out about the housing for the Australian dollar, so that could be what's impacting this move right here right now, which you're seeing. You get some positive traction with the Great Britain Pound, Aussie dollar. So like I always say, with these currency pairs, man, just kind of watch how it plays out over the next 48, 72. All right, there's going to be some information that comes out. Was it Tuesday? I believe about the interest rates for the Aussie dollar. So building up to that, we're definitely going to get a move. And then once that information gets released, you're definitely going to get a move. So if you're already in this particular pair here, it's not much you can do other than adjust your take profits accordingly. Because right now, if you're in this, your take profit should be no higher than this green line here, my friend. Which makes sense because it comes back up to the resistance and it comes back up to the resistance and the counter trend line channel, but don't even know if it's going to make it this high. So we'll see. We'll see. Over the next couple of hours, should get some good move, and you should get some good momentum move in the Aussie dollar pair. So we'll see. And the next one we're going to look at would be the Great Britain Pound US dollar, right? And it's checking along here, right? And as you can see right now, it's kind of bouncing off of this resistance, which has turned into support, right? Here's our A, B move. Here goes the C, right? Price has retraced back from its highs, which it came extremely close to hitting our D price target, but as you can see, price has pulled back since, and now just kind of chugging along. It's kind of doing a little down to the side and almost like creating a little bit of a wedge here, right? The price is consolidating, right? Here goes a high, lower high, lower high, lower high, lower high, lower high. And whereas the lows is pretty much just kind of comfortable being right here at the bottom. So it's kind of, if you look at this right, it's kind of coming to a point, right? It's consolidating. Price is coiling up. And so what happens when the price goes into a coil? Usually at some point it's going to explode. It's either going to go to the up move or it's going to go to the down move. Now, if you followed me before in the past and you understand some of the things that I've said before in the past, typically when price is consolidating, 70% of the time, once it comes out of consolidation, it returns to the original trend, right? So if the original trend was moving up, that means once it comes out of consolidation, it goes up. If the original trend was going down, after it comes out of consolidation, it goes down. 70% of the time. It's the other 30% of the time that you got to worry about. So if this is true, then what's going to happen is once this thing finishes consolidating, you should expect a nice move up, which will hit your take profit up here. But there's that off chance that price could just go down, right? But so if you're in this pair right now, hang tight. If you're not in this pair, don't get into it. It hasn't given us a buy signal yet, so I would, once again, place a hold on the Great Britain pound US dollars. Not a buy, it's a hold for the moment, at least for me. Okay. Let's check out this other pair. This is a pair someone had talked about last week, and we went in and we did some analysis on it, and we looked at it and saw at the time it wasn't particularly a buy at the time. It looks like it's coming close to being a buy now. Still not a buy as of yet, but let's look at it. This is the Euro Australian dollar, right? And as you can see, these are the Fibonacci patterns that's been on this particular pair. And you've had, what, 1, 2, 3, 4, 5, 6. This is the sixth one, right? So this pair has definitely been adhering to the fibs. The issue is it ready to make money with this next pair? All right. Let's see here. Bump, bump, bump. So still hasn't crossed over into the buy zone. I mean, price is moving up here. All right, looks like it's trying to touch this downward counter trend line. All right, but it hasn't tapped it as of yet, but it looks like it's getting close. So we're probably within a day or so of it actually going over into the buy zone, maybe a day or two. On the hourly chart, however, it looks like it's already started making its move. As you get some good touches up against the counter trend line here, price looks like it's trying to close over here. So what you're gonna see, what you're seeing right now, is kind of it's conflicting, right? So you're seeing if this right here does hold up and it does close on the hourly trend, but it doesn't close on the daily trend, then you kind of say, well, hey, look, it closed on the hourly. Shouldn't I be able to go ahead and get into it? And don't worry about the fact that it didn't close on the daily. My opinion, I would probably say no. That's just me, right? If you feel comfortable with trading, you could. Because when I trade, I'm trying to trade with momentum. I want a lot of momentum. I want a lot of buyers in the market. Of course, it's going to go up first on a smaller scale, then before it goes up on a larger scale, just because it's 24 hours in a day, right? So it means at some point in that 24 hours, buyers have to come in before you get a positive day. So that means that the whole positive move starts on a lower time frame and expands its way out to the bigger time frames, right? So this could be like the early indicator showing that it's going in. Personally, I like to already see that it's already there before we get in, because what could happen? Well, Murphy's Law, what could happen is the worst that could happen, right? You get in here, right? But price is still not making, you still don't have a lot of buyers in the market. You got in early, then all of a sudden, what happens? You know what? The buyers that were in here get out and sellers take over and price continues to move down, right? So that's the big fear And that's the big takeaway that I take away from it, that I don't want to be that guy that gets in when everybody else is getting out, right? So just to be a little cautious on that, I would just kind of, just to be a little cautious on that, I would sit back and just kind of just wait. I mean, you know, wait for the setup to happen, right? If it's gonna happen, it's gonna happen, right? If you're getting positive momentum, right, and it's gonna push up, it's gonna push up. It's gonna push up on the daily. It's gonna push up on the hourly. It's gonna push up. Wait for it to happen. Let it push up, and then you got momentum in the trade, and you trade in a little bit more confident. That's just me. Like I said, you could get in it. I've done it before in the past. I've seen mixed results with it before in the past. I just think it's a little bit more assuring that you got momentum on the larger time frame along with the smaller time frame. It seems like you get more of a follow through push than just trying to get in on a smaller time frame. But if you got to get in early, that's what you feel like you got to do. Hey, trade high, trade what makes sense to you, right? Because remember, this whole trading stuff, man, it really just comes down to a couple of strategies and then how you personally adjust those strategies to your trading style, right? You may trade different from me, I may trade different from you, but we all may arrive at the same results, right? I don't think there's any one particular way that you have to trade, but I do believe that you have to trade with a strategy. And I think there are some strategies that are better than others, though, when you're looking at trading. Okay. So this right here is the U.S. dollar, Canadian dollar, and this thing is continuing to go down. So this right here, prime example, right? So here goes your A, here goes your B. Haven't found the C yet for this particular pair, right? This is the U.S. Canadian dollar, right? Now, at some point in time, this thing is supposed to turn around. And I think we looked at a couple of opportunities or potential opportunities before in the past where it could have turned around, but this thing is still going down, right? Definitely not a buy as of yet. This thing is in selling mode, is in sell-off mode right now. We may come to a point where it looks like it's going to be a buy, but it has not, that point has not materialized as of yet, as you can see, right? Price goes down, comes back up, bounce off that line, goes down, comes back up. It's clearly a sell-off. Right now, because we're still within our ABCD pattern, it just looks like it's just a retracement, right? But of course, once we get through that A, now all of a sudden it becomes a full-blown market has turned, and we should be looking for selling opportunities, not buying opportunities in this particular marketplace. There's still opportunity for this thing to turn back around, right? Just that it hasn't did it as of yet, right? Because price could still come down to here, bounce back up. It could still pull back from here, bounce back up, or it could pull from here, bounce back up, or it can come down to here and bounce back up. It's only once it goes below the A, which we've pretty much given up on it, and says, you know what, this thing is done, right? But it hasn't done it as of yet. So we'll see. Let's look at, this is the last one, which is going to be Aussie US dollar. This is the pair that we're locked into a death match with again. Thank God we made profit. Oops. What did I just do? Okay. We made profit our first time out. Oh, okay, I got it. What this? There we go. All right, so yeah, we there we go. So yeah, so this is the pair right here. We made profit, about a week or two ago, about a week ago on this particular pair, right? Came at, hit our target, that was good. Price began to pull back. We said we're going to wait until it pulls back before we get back in it again, because obviously this thing is making Fibonacci on an upward trajectory. which is cool. That's what we want, right? The next projected trajectory was up here, right? We went in, we marked our horizontal support resistance areas, and our next fib actually landed on our one of our support resistance, which is even better. Lets us know we're making the right moves. Now, what happened? Right? Here's the hourly chart. This is what we're trading off of. So once again, this right here was the original take profit. Price, charged through the take profit, pull back, begin to make a move up. We've seen this before in the past where it made a shallow move up after a here we go. I want to put the fibs on there. We've seen it before in the past where price has made a shallow move up after, or a shallow pullback rather, after a strong move up, and then we've seen is that price then comes back and begins to retrace because it says that, hey, you know what, we need a bit of a break. So we didn't want to get in at that moment. So what we did is we put our counter trend line on the charts, right? And sure enough, price went up, price came down, price tested it, came back down, price tested it again. And on Friday, what we saw was price actually cross over. And when price crossed over, we went in and we purchased, right? And counter trend line held up pretty good. Price went all the way down, right, and still closed back above it, which was a really great bullish momentum in the market. But then price began to deteriorate as we went into the afternoon, and kind of this is where we at right now. So prices pull back significantly. Matter of fact, prices pull back to that at point two. Was it 0.236? Yeah, 0.236. Here in the market. It's trying to look like make a move up again, but we're still getting some sell-off. I gotta tell you, I still feel good about it, not really concerned. We're on the buy side of things, which is where we want to be at. It's just unfortunately that it hasn't made another. If you're trying to get into this, so if you're already in here, you're already in here, right? If you haven't gotten in here yet, what you got to do is you got to wait a little bit, right? And even on this one right here, I mean, even now it looks like it's telling you that you could have a potential buy-in because it's crossed over this downside trend line again with a positive, right? So, I mean, even now this could be definitely a signal saying go ahead and buy. Use caution getting into it. Like I said, tomorrow, Tuesday is when we're going to be getting the interest rate information. A lot of the expectations are already baked into this, but of course people are going to be getting in regardless. So people are going to be selling out regardless. And then once the news come out, that's when things is really going to, push one way or the other. So, use a bit of caution, use a bit of common sense. Make sure your stop losses are in place. Don't ever trade without one. And, use your judgment on it. Me personally, I'm already in it, so I'm not going anywhere. I'm just sit tight on it. I got my stop loss in place, right? And I'm just going to sit back and see what it does. I personally feel like that, we have momentum on that side. Now, I could be wrong. I've been wrong in the past, and the ABCD patterns have been wrong in the past before. But we're going to see. A couple good things that we got for us is that overall, price is on the buy side, right? I don't like putting all this stuff on my charts, but for the purpose of looking at this, we will. Oops. Oops. I can't get it going. What am I doing? Yeah, so as you can see, it took me long enough, right? All right, so price on the buy side on the daily, which is good. So that means that we got momentum coming in on the daily on a larger time frame, right? So then we switch down here on the hourly. Boom. Prices on the buy side on the hourly, so which means that we got price coming in fires come in on a smaller time frame as well. Now, what we'll notice though, price or on this hourly chart here, uh, it looks to be a little bit of a sell-off. Even though we're on the buy side originally, came in on Friday, price began to push down, and you will get this. You will get this. You will get this. All right. A couple things that you could do is either you can sell out of the position, take whatever loss that you have, and then wait for price to cross back over into the buy side again. Right. Or and there's a couple of different ways you can look at the buy side. I think originally we capped it off here, right? Yeah. Or you can, ride it out, right? And that's what I intend to do, right? So I'm already in it. One thing about it, when we make our trades, we try to make sure a couple things. That one, our stop loss is efficient and it's in accordance to our account. So that means that if our stop loss gets triggered, it's not going to destroy our account, and that we don't receive a margin call if price goes between where we entered at and somewhere between where we're scheduled to get out at. Right. Although the account that I am in is extremely small, because remember I told you I started as a live account. I think we only put like $360 in a live account, because what we want to do is try to build it up over time. So although it is kind of small right now at the moment, what we're going to do, we're going to leave it as is, all right? And we're going to see how it plays out over the next 48 to 72. If something happens and it gets critical and price really starts just shredding, and then of course we'll pull out and then go back and reevaluate our position. But I think for right now, I think we're good. I think we're seeing right now is a little bit of a pullback from the strong move up that we had the other day. I don't think there's any need to panic, but I do think there's need to sit back and have a wait and see approach with this particular pair, which is what we're doing right now. Okay. Anyway, guys, listen, thanks for tuning in. I appreciate all the support. I hope you guys have a wonderful rest of your day. We're getting out of here kind of early tonight because I think we went through everything. I don't really have anything else to give. If you guys have any questions or have any thoughts or have any currency pair that you want us to look at, shoot me an email at forextechmagazine@gmail.com, or you come in here on when we're doing the live stream, just put it into the chat box, and I will be more than happy to go through and look at it for you, and it'll be my pleasure. Other than that, I'm about to get out of here. Thanks for tuning in. And for all of our new followers, man, thanks for the support. Love it, guys. Anything you guys think of that I can do to help you out anymore, just let me know. All right. Take care. I will see you in another 23, 24. Take care for now. See you soon. Bye.